So, welcome to this episode of the Founders Peak podcast, which is in collaboration with Couchonomics with Arjun. Joining me on the yellow table, as I've coined it, is a guy who just has more energy than a six pack of Red Bull. I've only sort of known him a couple of days, and he's usually bouncing off the walls. This is Varun. He's sitting across the table. He is, among many things, the founder of something called Fintech Nation. I've also been told he's one of the leading voices of fintech in Singapore and beyond. With that, Varun, welcome.
Thank you so much, Arjun. Thank
Thanks
you.
for taking our time.
Pleasure.
Right. So, Varun, 15, 16 minutes, coffee table, unfortunately, I have coffee. Unfortunately, I couldn't get you any. The conversation is very simple, right? So the overarching theme of this year's SFF is around re-architecting the future of the global financial system. You could put everything under that umbrella, right? And I think that for good reason. I think we're going through a phase where there is so much going on that there's more things that you can point your finger at than time permits, right? So the first question for me is, for you, what does that term mean? Re-architecting the future of financial systems.
For me, it means how technology will help people fight inertia. A large part of financial services historically makes money because of inertia. A checking account bank makes money because people don't move money. Corporates are not allowed to have access to a lot of things in their savings account so that the bank has a free float and they use that money for a lot of other things. How inertia goes away, how fintechs are building auto sweep accounts, how making auto remittance accounts so that you don't have to jump through hoops. And there is an AI, where there is a full AI, generative AI, a workflow automation, but to help move money real time into your checking account now that Treasury pays 5%. Somebody who files your insurance claims automatically, somebody who files your travel claims automatically, so that inertia goes away, inefficiency goes away, and the margin you will earn will be for the efficiency you generate, not because of inertia and laziness and occupiedness of your customer. So that re-architecting across value chain, across verticals of financial services with technology enables the lazy slow to work fast or their lunch is taken out.
No, so that's actually quite interesting. So as you were saying that, the thought which crossed my mind is, what needs to happen first? All the textbooks that we've ever read need to be rewritten, right? Because unfortunately, most of us who've lived in the world of finance or financial services and educated ourselves, we've been taught how to leverage inertia to the maximum, right? And so the unlearning, if I may use that term, needs to start a lot further in our sort of evolution as professionals. But in any case, this is not about what I think, right? So I like that concept of inertia. A lot of people have given their sort of versions. Nobody has said that, but I think everybody means that. I get it. Tell me two or three things, because we could talk about 20 who trends, catalysts, innovation platforms, whatever word you want to use, right? Which you believe are going to have the most profound impact in the shortest time. Because we could talk about quantum, but I think we're a few years away from it, right? Shortest time, most impact. What are your sort of candidates here?
I say interest rates are going to be high for a while. So the amount of work which will happen in fixed income and offering of that to the last end of retail and corporate customer so that they are not dependent on the checking account. So the checking account, which we knew for last 20 years, will not be like that for next 10 years. Because this is that massive interest rate cycle which the world hasn't seen.
So what do you mean? You mean tokenizing these?
No tokenization. That's too complex.
Okay.
Allowing people to be able to park their money in treasuries or the likes of it so that they are not leaving the money idle. That's it. So whether you get it from a CMS license, a wealth license provider, or your bank or your neobank, it's as simple as that. Somebody will run it on an omnibus account. No need for complex blockchain infra, tokenize. Keep life simple. End customer does not want to know how your infra is.
Totally agree with you.
At the back, see, what is tokenization? This is what omnibus and named service account used to be for last 40 years.
Yeah.
You name a fancy word, now it's called tokenization.
So, but my question is, if it's so easy, why isn't it happening?
Because the incumbents have no incentive to do it.
Well, what's the incentive now?
they don't have an incentive because now they have challengers who have started to do it. So if imagine you have a Wise account in Singapore as a company, Wise would pay 4.5% US dollar interest rate. Your savings account in a traditional bank would be sub 1%.
Agreed, but isn't there a trust angle with all this?
If the people trust the regulator and the regulator gives license to, let's say, a Wise in this case, who works with an asset management company which is owned by OCBC Bank. So technically, you're trusting OCBC Bank from that perspective.
Fair enough.
So OCBC Bank has an asset management company who licenses their infra to a fintech payment company to offer this. So it's no different than putting their money with OCBC.
And my question then is, are people educated enough to know that?
5% are, and those 5%, and the rest 50 will get evangelized from this podcast.
Well, I don't think we have that much reach, but you might, right? So I will send you the tape. Right. So let's move on to next. What else do you think is on the offing in terms of, reducing the friction and sort of democratizing income, if I may call it?
So other part is gig economy and self-employed workers. In post-COVID world, you've seen a lot of them move to ride-hailing, move to freelancing, remote working. These people are cut off from everything which is retirement benefits, pension planning, and employee wellness, basic hospital care and everything. So regulators have started to push in some places. Some places the platforms are under pressure, and that puts pressure on insurers and pension managers to create solutions for these people. Just because somebody does not have a 9 to 7 job, that person, so financial exclusion of a fastest growing segment of economy is a reality we face today.
No, I do, and I think the whole term financial inclusion has rewritten itself, right? In the good old days, financial inclusion was unfortunately, the extremely the extremely sort of low income group. But I think the definition has. But let me sort of challenge that thought a little bit. I'm not going to challenge the idea of what you're suggesting because I think you're correct with the idea. Are you a function of a very progressive market and the language that you use, right? There are parts of this world which are substantially larger economies, right? With substantially larger number of people. This shift isn't that easy for them, right? So for maybe Singapore and some of the other city-states, right, with 3 to 5 to 9 million people, right, and a regulator which is very progressive, is integrated into the business, this happens. How do larger countries, with much more incumbent thinking, achieve that transition?
I trust the social media in their country to do the job in that case. The premise is if the workers in one market are seeing this, suddenly you will have people asking for the same in those markets from that perspective. And you will have one politician who will stand up and say, yes, this is right. And I want to campaign on the fact that all this X app driver should have similar benefits from that perspective. The fact is, every time there is a change, it takes time. It took world at least 50, 60 years post-World War to align that the corporate tax should be, there should be minimum corporate tax globally. It would take similar time, not I would say 50, but it would take similar time for people to agree. Now, all countries agree that there should be maternity leave. Most countries agree that there should be paternity leave. Is the amount different? Yes, in most countries. Similar will happen for gig platform workers also. At some point, they will all agree and then they will still have difference. So the amount of benefit which country X and Y will mandate as the floor will be different, but it would be on the similar lines of maternity and paternity leave. Whether it takes 5 or 8 years or 10 years, that's depending on how social media becomes active.
So, but then let's talk about the catalyst, right? Because there are a number of catalysts, right? So there's something around education. That's one, right? So let's not talk about that. Is technology or unification of technology across several countries going to be the catalyst? Right? Or you actually added a very interesting comment. We just said, and I'm going to catch on to that. Some politician, right? So talk to me about what's going to be this catalyst to change. Doesn't matter 5, 7 years. And as you said correctly, it'll come at different stages, right? What are the catalysts for change?
One simple catalyst is the number of people who are in the platform work. They don't have access. If somebody gets sick, they have no access. And these people do vote. And these people need benefits from that perspective. So if there is a voice that there should be benefit for these people, there is a merit to that. That would appeal to certain people from that perspective. And all you are saying is, because you are in this job, you should have it. And these are regulations for other markets already. Right? It's not that this is just done for you. You are being siloed out. If there is a maternity leave, paternity leave for different forms of job, If you're another form of job, yes, whether it's state, whether it's corporations, and whether there is a mix of it, that will depend on the economic model. There are some countries which have, let's say, healthcare funded by the government. Some countries is corporate. Some countries, it will evolve into certain similar shape. But the premise is now you have a segment of population in a different employment system. The 9 to 5, 5 days a week is a fourth generation. When the factory assembly workers have, now we move to knowledge workers. Knowledge workers have also moved to the platform gig workers. So every time the shape of employment changes, the society changes, and the social groups which will voice out that these are genuine concerns for these people. Because if this person has a challenge, he has a flu, he cannot drive for 5 days, his family starts to get impacted, the society starts to get impacted. So when that social side happens, for a society you need to lift everybody together. You leave a few behind, that actually becomes a bigger issue down the road. So from that perspective, technology's role, for example, is now, let's say I am driving for 3 platforms. How do I see my financials in one place? Can I do my tax calculation and benefits calculation in one place? Can I know which insurance what I'm getting from where? How do I deposit money for my retirement planning? So across multiple platforms. A bank today asks you for a salary slip for a loan, but there is no salary slip for these people. Is there a tech company which can say I have verified income proof from these 4 platforms for this person?
Proxies, right? Triangulation.
Not even proxy. Yeah. I'm not talking proxy. Imagine if these is a tech company who says I have got approval from these tech platforms like Grab, Gojek, Deliveroo, Food Panda, Comfort, and this is approved income. They're like, this is, I'm signing off that this is the real income, and there is a API connectivity which proves this is real income. Dear bank, can you now give this guy a credit card? So this guy can't even go there because he has no salary slip.
So it's a very interesting point, right? And just be cognizant of that. Last question here. So I don't know if you were here in the morning. Did you hear Ajay Banga speak?
I was
right.
there.
So he talked about young women or women and the youth,
Yes.
right? And the youth forms quite a significant part of that gig economy, right? I would imagine that is the gig economy, right?
New mothers also, because when they want to get back to workforce, this is a very good way to get back to
Right.
partial time workforce.
So the word he did not use, or if he did, I did not hear it, was he did not use the word financial inclusion. But in a lot of ways, he alluded towards including the so-called excluded, right? And they're not excluded for any, I guess, any financial
They
reasons.
have a bank account, but there is much more to financial inclusion than a damn bank account.
Right. So the question I'm going to leave you with, last question here is, so the focus needs to be less about being tech obsessed and should be more around use case obsession.
Absolutely. So when I mentioned that allow these people to prove that this is their income, allow this person to set up his repayment schedules from these payment modes, allow this person to consolidate his insurance and benefits he receives from all of these places into one place, so that if I'm sick, I can file a claim, and then the technology can help figure out where to route what perspective. So you solve the information overload and anxiety. Solve these 2 things for this person. As long as you're solving information overload and anxiety for these people, they love you. Use cases will take their own shape.
Very interesting, right? No, I think, you know, as a if I just wear my consulting hat for 2 minutes and not my sort of podcast hat, this is a debate I've had repeatedly again and again and again, which is solve the problems of the world. Don't get too carried away with generative AI or blockchain or quantum, because as you said correctly when we started this conversation, we don't have to overcomplicate matters just because we need to prove that there's a piece of technology that we must use, right? I want to thank you.
Thank you so much.
I know you're a busy guy. It's your last day. I guess this is your event as much as it is anybody else's. Thank you for having us from the UAE. You know, hope to do more between Tech Nations and Fintech Tuesdays, which I spoke about very briefly. So thank you.
Thank you so much. Look forward to see you in Middle East and see you next year in Singapore Fintech Festival.
Hopefully, as
Thank
they
you
say
so
in our part of the way, inshallah. Right. Cheers.